Gautam Dugat is with us. He's head of research at Motilal Oswal Institutional Equities. He's joining us from the 9th Motilal Oswal Ideation Conference. Now, this is a conference which began, which ran on Monday and Tuesday. And I think, Gautam, we are all expecting you to tell us what did the ideation result in? Mid caps and small caps, right? That's the segment, that's the part of the market that the conference over the last many years has focused on, finding ideas in that space. Tell us, I mean, what kind of companies were there and what was the overall direction in terms of finding ideas there? Go on.
Sure. Good morning, Prashant. Thanks for having me here. We concluded our 9th Motilal Oswal Ideation Conference yesterday. We had about 80 companies over 2 days. This is a dedicated conference for mid and small caps because our flagship event is usually in August. So that will be the Motilal Oswal Annual Global Investor Conference. This is the ideation conference focused on mid and small caps. So we had about 80 companies representing various sectors. Given the recent correction that we have seen in mid and small cap indices, there's a lot of interest we have seen. About 500 investors meeting these 80 companies over about 4,000 odd meetings. So quite a interesting set of companies we have seen across various sectors. Some of them are recent listings representing domestic cyclicals, financials, defensives, global cyclicals. So there's a very broad spectrum of companies which participated. Almost 50 to 60% of these companies were represented by CEOs. So pretty strong participation we have seen. And obviously the recent correction, some of those stocks, some of those sectors where we have seen about 15, 20, 30% kind of a down move, obviously elicited a lot of interest from the institutional investors.
So what are the big themes that you are speaking about at the conference? What are the big themes that the market or investors seem to be interested in right now, Gautam?
So, Sonia, the broad themes, that they don't change very frequently. So there are 3 or 4 themes I would like to highlight, and we, I think, discussed it in the past interactions also. The first and most important theme right now in India is industrials. You are seeing some revival in private capex over the last 9-12 months. Government capex continues at a very strong pace. We've seen government capex in budget going up from almost 2.5 trillion rupees in FY19 to about 11 trillion in the recently presented budget for FY25. So that is a very big mega theme right now, which is underway, which encompasses many sub-themes like infrastructure, capital goods, roads and metro construction. You have seen the Prime Minister being on an inauguration spree, where he's inaugurated airports, expressways and things like that. So industrials, to my mind, which is a subcategory of domestic cyclicals, is one very important theme that we have seen. Of course, the government's also prioritizing manufacturing through various PLI schemes and capex, and also allocation towards the defense sector that we have seen. So that is one theme. Second is obviously the financialization of savings that obviously transcends short, medium, and long term. It's for the decades, I think. There were several companies representing the capital marketplace where the penetration on the retail equity side was discussed in many companies and individual meetings. But I think that's a very big theme. You can have wealth management, you can have capital market, you can have various infrastructure companies catering to those capital market companies. Besides the usual banking and NBFC that one is very well versed with. And third, and most important, which I think is an evergreen theme in India, which lasted for the last 10 years, I think can continue for another 10 or 15 years, is the consumer discretionary theme. Now, the difference here is 10, 15 years back, you had only consumer staples and few consumer discretionary names. Today, given the lot of listings that we have seen over the last 4 or 5 years, there are varieties of consumer discretionary subsectors which have got created. So you have hotels as a sector in its own right. You have jewelry as a sector in its own right. Similarly, you have apparel, footwear. So that's a very dominant theme in my view, because as we talk about the GDP moving towards 7-8 trillion and per capita income moving towards $3,500-4,000, these are the companies which are going to become very big in the foreseeable future. So these are the 3 themes I would very specifically highlight, apart from some of the cyclical things like real estate and of course, some of the infra names that we spoke about.
All right. Hi, Gautam. Good morning. I particularly want to ask you about real estate, because on a weekly basis, when I open the papers, to read out news, you hear about various big stock market investors going ahead and buying bigger apartments, and the theme is clearly that in the longer run, equity markets will do well. But in the near term, it seems, there is quite a bit of money moving to actual houses, and not small houses, quite large ones. So how do you play this theme, if you think it has more headroom? And for this month, actually, the index has been an underperformer. But over the last 1 year, the real estate index itself has done very, very well. Please go ahead.
Yeah, Nigel, I think this is one of the themes which we are very hot on. And in fact, we have a significant overweight on real estate in our model portfolio. See, what has happened is for more than a decade, this sector has remained stagnant. After 2008-9 boom, you've seen the sector pretty much doing nothing over the next 11, 12 years. It's only in 2020-21 that things have started looking up. And then in the last 2-3 years, the data that you have seen, for the companies which are in the listed domain, and of course for the companies that we cover, we have constantly seen upgrades coming in for pre-sales and all. Now, if you look at the real estate cycle, typically cycles don't get over in 2-3 years. So our view is that there is far more durability to this cycle than what we have seen in the past. One key difference that we are seeing in specific micro markets is that developers are far more calibrated today in taking prices up in the big cities compared to the earlier cycles where we have seen developers became greedy too early into the cycle. So our view is that the durability of this real estate, and for that matter, even hotels, the cycle is much higher this time, much longer, going to last much longer in our view. And that's why we have about 3 to 4 real estate stocks in our model portfolio. So we think that within the broad domestic cyclical segment, this is one of the very prominent sector, and we think that the amount of wealth creation that one can see through in this space in the foreseeable future, we can still compound quite well, despite the fact that the last 2 years has already been very good for the real estate index particularly. In our model portfolio, if you see, we have stocks like Godrej Properties, Sobha, Sunteck, some of those names, which are like cumulatively, they add up to about 4% weight in our model portfolio versus almost a zero allocation in the benchmark.
Gautam, just to stick to that point about real estate, because it's sort of, all around us, right? And there are transactions happen and you talk to people, etc. In Bombay, for example, where a large player like Lodha has got lots of concentration, do you think there are already, I was reading an article over the weekend which said that maybe the market's going to get oversupplied very, very fast. And that process has already kind of started. Now, of course, branded players will do well. And over the last couple of years, we've had a situation where volumes, in terms of unit volumes, have gone up and pricing has also moved up year after year. But are we, is that something to watch out for? And what will happen if pricing stalls at these levels because of the oversupply? What happens to stocks in that kind of a scenario?
So, Prashant, in a sector which has a very high ticket size and which is deeply cyclical, one has to be always cognizant of some of these underlying operational parameters, whether it's demand, supply, or pricing. That's why I mentioned in the beginning that one of the differences that we are observing in this cycle of real estate versus earlier is that the pace of realization increase is far more somber and calibrated in this cycle than what we have seen in the past. And therefore, the view that, the durability of this cycle can be much longer. Plus, if you do the basic maths around the potential demand and potential supply over the next decade, you will still feel that despite the supply going up anywhere between 10 to 15%, the demand will still be enough for this supply to get absorbed. Now, obviously, for a sector like real estate, which is very high beta and deeply cyclical, there will be times in the next few years where sector may do nothing. There may be deep corrections also along the way. But from a slightly longer term perspective, I think when you look at the overall forces at play, at the margin, we think that the risk reward is still very favorable in the real estate sector. Obviously, you have to do a lot of bottom up work here and figure out who are the leaders in various specific micro markets, because no one company is a leader in every micro market. So therefore, the view on individual company will always differ, despite having a very positive view on a top-down basis for the sector.
Okay, all right, Gautam, we leave it at that. Thanks a lot for joining in and all the best for your ideation conference. We'll, of course, hear from you again very soon.